Good morning, everybody, and welcome to another installment of the Golden Nugget that happens every single Wednesday at 11:30 Eastern Standard United States time. I'm Drew Wolfer. I am a verified pro trader, and I am your golden guide to everything that is happening in the metals markets. We have another star-studded cast today. We've got Trump, we've got Powell, we've got the central banks, we've got analysts, we've got everything that you want to know inside of not only the metals markets, but technical analysis as well as the overarching financial markets. So welcome to the legendary Verified Investing YouTube channel, as well as the Drew Wolfer YouTube channel, the Verified Investing Twitter, and my personal Drew Wolfer Twitter. Wherever it is that you're watching from, humble appreciation from our side. We would not be able to do this without you. So thank you so much for showing up to the Golden Nugget. Now, let's talk about what the Golden Nugget is for anybody that is, their first time here. So what we're going to do first is gauge gold. That's where we do technical analysis in gold. We talk about the trades that we did last week. And spoiler alert, if you were here last week, you made gains like you have pretty much every single Golden Nugget that has aired thus far. Secondarily, we will then give you the technical analysis of what's happening now and potential trades for this coming up week, right? Because I only see you once a week, so I can only give you swing trades, right? Secondarily, we will get into what is called the silver snapshot, where we do the exact same thing. And again, spoiler alert, if you were here last week, you made gains, baby, and you just made them this morning. It was a perfect move. So then we will get into what is called the commodity compass, talking about everything that's happening inside of the metals markets, what's making it move, what's making it tick right now. Then we have the knowledge bank, which I call, spoiler alert, the Golden Nugget, right? And it is a Golden Nugget that I am dropping once a week, every single week, to kind of give you and education and understanding of what is inside of the golden opportunity training that I brought out in conjunction with Verified Investing that teaches you how to trade in any and every financial market. Technicals are technicals, whether you're a day trader, swing trader, scalp trader, investor, position trader, whether you trade metals, other commodities, right? Forex, crypto, stocks, equities, all, options, anything. We can help you learn how to trade those things inside of the golden opportunity. So that is what the Golden Nugget is all about, to show you kind of a tidbit of what is in there, see if you want to get in there. Then after that, we will do two special segments and we will get into the economic calendar. So I don't want to waste too much of your time. So without further ado, let's just get into our very first segment, because that's probably what everybody comes for. They come for the braids, they stay for the trades. Let's gauge gold. Now, the first thing I want to show you on the gold chart is the trades that we obviously were talking about last week. Okay, so here they are. Let's check out exactly what happened. So we had a couple of different scenarios. This is the silver chart. I apologize. I gave you a spoiler. You saw that on the silver chart. I'm actually going to take that off really quick because I don't want to give people spoilers. I know I'm king of the spoilers, but for all intents and purposes, let's not spoil it this week. All right. Now, we have our trades that we were talking about last week, okay? And this is why it's so important, and I seriously, I urge people to get inside of the golden opportunity, because you would have taken, either way, whether you took both of these trades or you only took the one that actually hit perfectly, you would have been massively and wildly profitable. Even if you got stopped out on your long here and then just entered short, you would have been wildly profitable, especially with the risk management that we teach you inside of the golden opportunity. But inside of the golden opportunity, you would have been able to decipher, because I can only see you once a week, right? I can't give you real-time updates like, hey, this is market chop, because that's all this was. This was all market chop, and this was not the time to enter that long, right? So that's the problem that I see a lot of people kind of running into, is they'll buy into these really choppy markets before there's an actual confirmation, and then a, kind of boom, back test of that line. And I apologize that lagged a little bit, but you kind of understand what I'm saying. Back test of this line and then boom, right? Because we never actually got that here, but we did get our short. So last week we were talking about this value area high and this upward sloping parallel, and we can zoom out and I can show you that parallel that we broke down from. So we're trying to get back into this parallel that's been very well established since I believe it was like early 2024. So we were going to have a hard time getting above this level. And basically what I was saying is, hey, if we get above this level, you can long this up to about $3,450. Obviously that didn't happen, right? We got the rejection at the level, and that's when you entered short and you came down here to the point of control, front ran it. And as you can see, big profits for a nice gain on a 5x risk to reward. And if you took this trade, this was a 10x risk to reward, so you lost barely any money on this and made a ridiculous substantial amount of money on the way up or on the way down after that subsequent rejection. Now, I want to show you what's going on inside of the market right now. So I'm going to pop up these trend lines. The ones that are red are going to be resistance. The one that is green is going to be support, okay? So long as we uphold this level, especially if the 50 moving average intersects it, which is about $3,345, $3,345 for all intents and purposes, right? We'll call it that. And if we can break this downtrend line right here and this upward sloping resistance line right here. And how did I figure these out? Well, I connected these lows to these lows right here that came subsequently after it. And as you can see, we broke down from it, used it as resistance. So this is a key resistance level for us to get above, right? So for all intents and purposes, as it sits right now, there's two ways that you can enter. One, you can enter right here at the 200 moving average, which is this green line. As you can see, we just lost it. If we can regain that 200 moving average, you would set your stop loss outside of this, green support line right here. And I'm not saying that, you need to set it that loose, right? You don't have to, because you can also average down and take another buy opportunity here. And you could even take another buy opportunity right here at this point of control, okay, on our FRVP, which is a fixed range volume profile. Now, I'm not saying that you need to do that, but for all intents and purposes, if you can break this line right here, regain the 200 moving average, you are entering long, and then you would set your stop loss pretty tight here, and then say, you get stopped out on that. That's perfectly fine. You have a secondary entry point right here to, again, target the exact same move all the way back up here to the value area high. Now, I have to say this. These are game time decisions. If you do enter here, right, you have to see what happens at the value area high. Do we get a rejection? Then you need to get out of your trade. If it's got room to run, you can ride it all the way up here. So I would say that that is your ultimate target right up here to about $3,415, and then see what happens there. Because if you get back above it, you remember our trade from last week, we said, hey, if we can get above this, bang, we need to be longing, okay? So these are game time decisions. So same thing happens here, right? This is your game time decision. This is your ultimate target right here, all right? And as you can see, 3.38 risk to reward, 4.8 risk to reward on this. Now, let's get these off of here, and I can tell you where you can be shorting, okay? Because say you do come up here and you get a rejection, because this is an issue, right? If you reject from here, especially if you reject at the 100 moving average, this is a set your stop really tight, and you can write it down to either this support level, right, for a 5x risk to reward, and again, game time decisions, or all the way down to the point of control, which is an 8x risk to reward. So I'll just leave it there for now, and then we will see, how it goes whenever we get down to those levels, right? Now, the other long trade that you could potentially take, and again, game time decisions, everybody knows that. I'll keep saying it, and I'll keep saying it. Once you get above this level, that's where you set your stop loss outside of the 100 moving average. You target the value area high, 4x risk to reward. You see what happens there. You target this. If you run through it, great. You target right here up at this, the bottom end of the trend channel, and then you see what happens there. And if you get through it, that's where you can start targeting that $3,450 level, right? Okay, and that's the previous swing highs right over here, as you can see. Bang. So that is essentially gold in a nutshell right now. And what we're going to do is we're going to go ahead and put these into the Golden Nuggets folder, and I will label them later. Now, let's do the silver snapshot. We absolutely killed it on silver last week. If you took all these trades, at the very least, you went 2 for 3. And if you took just the trades and you didn't take the choppy long on gold, you went 2 for 2 last week. 100% win rate. Absolutely insane gains that we're seeing, right? So what were our trades last week? Well, it was pretty simple, right? We said, look, if you get a retest of this 200 moving average and a bounce, you're longing to the value area high, right? And this is the value area high. from this range all the way from here to here, right? So that's the value area high. Obviously, we never came back and back tested the 200 moving average right after that video. And, you know, the subsequent other trade was if you lose the 200 moving average, you're shorting down here and front running what is called the value area low, okay? So what actually happened? Well, it took us a while, but we got the trade. You got 1, 2, 3, 4 different times that you could have entered and set your stop loss outside of that 200 moving average, and then bang, all the way up to the value area high. What was the risk to reward on this trade, right? Let's see. 10x risk to reward on this trade. Never actually got our chance to enter a short position. Again, whenever you're entering these, you got to make sure you're not entering in choppy markets. And secondarily, you got to wait for your confirmation candle and the back test. Wait for the back test on these markets. These markets stick to the technicals very, very well. Okay, so congratulations to anybody that took this trade right here and literally just got their full take profit 2 hours ago. Let's go. Now, let's talk about what's happening inside of the markets right now. So I'm seeing this rising wedge, okay? And as you can see, we'll label these. I'm perfectly fine labeling these. Green means good. Red, you guessed it, means bad, right? So that is resistance. This is support, okay? So there's going to be a few trades that you can take here. First and foremost, if you fall below this level, $3,788, that is bearish, okay? You would, if you saw a bounce here, right, you can see the 200 moving average is starting to curl up and almost trail this line right here. So this is a really good trade to start thinking about. And again, game time decisions, everybody. You know the game time decisions. If you enter here, I'll show you exactly what could happen, right? Say you come down here, you enter here, okay? You got to see what happens here at the point of control, this yellow line. If it runs through it, you're targeting the value area high. Then you got to see what happens at the value area high and the upper end of this resistance. If you get up above it, boom, that's perfectly fine. Great, you can start adding to your position. Your secondary long is once you get above here, similar to the gold trade that we gave out last week, you would set your stop loss pretty tight on this, and then you would be targeting the top end of this trend channel. At the very least, you would be targeting right over here at these swing highs. So we'll just set it there. Again, game time decision. You got to see this a 3x risk to reward. This one is almost a 10x risk to reward. And you got to see what happens at this level first and foremost, which is $3,918. Then you got to see what happens at $3,950, and then your ultimate target is going to be right up here at about $3,900 or $39.71 for a new 14-year high. Now, secondarily, if the same thing happens that's happened on this level, because remember, the more you bang on a level, the more likely it is to break, right? But if you do come up in here and reject, that is where you can short, okay? But I want to tell you about one more longing opportunity, and that would be if the point of control gets a bounce, especially if it intersects the line, okay? So again, game time decision, what happens at the value area high, what happens at the top end of this resistance, right? Now, secondarily, you can literally mirror these trades to the opposite side. You break this trend channel and you break below the point of control. Pretty simple trade. You are now going to be targeting these lows at the very least right here at about $37.54, but you would be trying to ride it all the way down here to that point of control, or not the point of control, sorry, the value area high. You are breaking down from the point of control, okay? So that's your short trade right there, okay? And then you've got one secondary short trade, which is, say you do get back all the way up here. You can do exactly what happened the last 3 times that we hit this resistance, right? So this is where it started, the resistance, right? Then this is our second hit. This is our third hit. And as you can see, both times that we hit it afterwards, we caught a nice little fade. Now, does this fade stay, or do you just bounce from the point of control and keep moving upwards? That is something that, you know, we will see, you know, here soon enough. But these are, for all intents and purposes, going to be your trades. If you reject from this resistance level and or the value area high, that is where you're going to be entering shorts. You're going to make your first decision here at this line, and then you're going to be making your second decision at the point of control, and then your third decision right down here at these swing lows, okay? Now, the one thing I do want to point out, and we're going to put all of these inside of our Golden Nugget trades section, This is a bearish charting pattern, and I'll tell you why this is a bearish charting pattern on silver inside of the knowledge bank, which is called the Golden Nugget. Now, I want to get into everything else that is happening inside of the markets because we've gotten through the TA. We've done everything that we need to do from that standpoint, right? But now we need to understand what's happening inside of the market. So the Fed, there are rate cut hopes, and this is ramping up on what we would call benign inflation data, okay? So U.S. inflation data, and this is something we'll talk about here in a little bit, right? It actually continues to stay within what we would call the Goldilocks range, okay? Fueling expectations of a Federal Reserve interest rate cut. What do we know about interest rate cuts? Well, if you're in the golden opportunity, you know exactly what happens whenever interest rates get cut. Gold goes up, right? And you know that if you watch this, because I say it every single week, right? Interest rates go down, gold goes up. Interest rates go up, gold usually goes down. And you'll also see equities, other risk on assets like Bitcoin and stuff like that pump whenever rates go down as well. So, you know, for all intents and purposes, rates go down, gold goes up. Now there is a 94% probability that they're going to cut rates in September, right? And the Treasury Secretary, Scott Bessent, actually is urging them to do a 0.5 basis point rate cut. So 0.5, okay? In September, not December. We thought it was going to be December last week. Now they've come out with new, guidance. We also have geopolitical and tariffs. Risks are looming, okay? Now, let's just be real. U.S. and China tariff truce, it's set to expire next Tuesday. This could be a very, very volatile market. But there are a couple of catalysts that could push gold and silver higher that we'll talk about here in just a little bit, right? Now, we also have Trump and Putin. They're going to have a summit on Friday. I mean, these are high-powered individuals meeting, okay? So I would definitely pay attention to what's going to be happening inside of the market. Then we have CPI rising 0.2%, and PPI is looming coming in tomorrow, okay? So CPI met expectations for month over month, but the core numbers is what most people look at, and that is what is actually an issue, in my opinion. We're going to talk about that in the subsequent special reports to follow. Trump also wants to sue the Fed chair Powell and dubs him Jerome Too Late Powell in a demand for rate cuts. Okay, so basically he's saying, hey, you're too late. You need to cut these rates, man. This is crazy. So then we also have money flowing into gold, and it's steadily increasing year over year. Multiple key markets. This is happening in this, again, something we'll talk about here in just a little bit. Now, I want to get into the knowledge bank, okay, which is, as you know, the Golden Nugget. So let's give you the weekly Golden Nugget, and I'll show you exactly what I'm talking about. This is where we're going to learn why this is a bearish pattern, okay? So if you are inside of the golden opportunity, you know why this is a bearish pattern. This is called the rising wedge, and I'm going to show it to you inside of the actual documents that we give you inside of the golden opportunity, okay? So essentially what you're seeing is rising price that's coiling into a squeeze point. This is what we're calling a squeeze point, right? So unless it breaks up above the resistance level, right? And again, here's your resistance level, right? So your resistance level is right here. As it sits right now, it's at about $38.70. If it breaks above this resistance level, it's going to nullify this pattern. But if it breaks below the support level, you could see a precipitous fall that comes, right? And again, we show you all of these things inside of the golden opportunity. We give you resources so you don't have to come here at once a week and say, hey, Drew, I'm going to rely on you solely to teach me this, once a week, just one charting pattern or one concept or whatever. We give you this entire document, and we even give you a quick reference guide that shows you, hey, you come up, third touch point. If you break after that third touch point, this thing's probably going to fall and par all of the gains that happened, as you can see right here. Bang, bang, could par the gains all the way down to $36.40, or at the very least to the value area low at $36.81. Now, what's happening inside of here, right? Price is setting higher highs and higher lows, but it is setting lows and highs that are way closer to each other, okay? So this is what is called tightening, squeezing, or coiling, where a violent move will happen at this squeeze point. It's kind of a choke point where it's choking price, and they have to make a move one way or another. Now, with the value area high being right here, okay, the resistance being right here, and then the point of control being so close here. If you were to reject here and then break down from here, your next logical level is $36.80. Okay, so that is the golden nugget, at least for today, right? So make sure you get into the golden opportunity where we teach you all of this stuff, man. I cannot stress it enough. You will get a complete trading and financial market education inside of the golden opportunity. It's not just about gold. It truly is the golden opportunity for all financial markets. Now let's get into our fifth segment, and then we'll get into our second special report, and we'll talk about all of the economic calendar stuff that's going to come over the next week in just a little bit. Now, this is called the Golden Globe. So what's happening across the gold as it pertains to the metals markets? Trump is announcing, well, he has announced, no tariffs on gold imports from Switzerland. Okay, so there was a lot of widespread speculation that, he was talking to Switzerland about tariffs and, on imports. They thought, the market, that there was going to be a tariff on gold, okay? Switzerland is where they actually fulfill the gold on futures contracts. It comes out of Switzerland, and it was like a 38% tariff or something crazy. So people just started buying gold in troves because they were like, well, if we get 38% tacked onto our gold, it's not going to be awesome, right? So you saw a nice run up in gold. And then once Trump said, hey, there's no tariff on gold, you kind of saw gold ease back. And now we're getting our opportunities for some trades, right? So as it sits, the bullion markets have kind of exhaled on that. And now we can kind of get back to regularly scheduled programming. And that regularly scheduled programming shows that gold-backed ETF investments, its demand has hit the fastest pace since early 2020. That's 5 years, baby. The first 2 quarters of 2020, which is the first half of 2020, now our holdings, okay, are still 300 tons below those record highs, but we are hitting a massive uptick inside of gold-backed ETFs. So for the first half of 2025, global-backed ETFs saw $38 billion in inflows, $38 billion, amounting to 397 tons in the first half of 2025 being added, okay, making the largest first half inflow since 2020. Now, total ETF holdings are 3,616 tons, almost exactly, right? Up from earlier this year, but still some 300 tons shy of the 3,915 tons that were the record high in October of 2020. Central banks are still buying, and ETFs continue to expand, okay? Now, the central bank purchases, the ongoing trade wars, the elevated geopolitical risks, and obviously the growing ETF holdings are helping to solidify gold's kind of gold super cycle, its bull super cycle into the future, okay? And a Fed rate cut could be in September and act as that catalyst to reignite gold prices up to, that $3,800, $4,000 rally, okay? Now, we do have global gold demand rising 10% year over year in just Q2 of 2025. So in 2025, gold demand rose by that 10%, and primary supply jumped to 1,250 tons, almost exactly, 1,249, right? But value on gold soared 45% in that same time frame year to date, $132 billion in profit, right? Driven significantly by that ETF demand and the central banks buying gold, okay? Now, let's get into our last segment before we get into the economic calendar that's coming up. So this is going to be called the Central Bank Watch, okay? So CPI came in. It rose to 0.2%. And everybody was like, okay, that's on par because they forecasted 0.2% for month over month, right? And they forecasted 2.8% for year over year. And this is headline CPI, okay? And it actually came in at 0.2% month over month and 2.7%, beating expectations on the headline year over year. Now, once you get into core CPI, it tells a little bit different of a story. They forecasted a bump in inflation by 0.2%, and it actually came in core did at 0.3%, which is actually higher than last month, which was 0.2%, right? That's not great. Then we have 3% exactly is what was forecasted for the year over year CPI, and it actually came in at 3.1%, and obviously it slowed from last month, which was 3.3%. So obviously it slowed a little bit, but it did worse than the expectations. Okay, so inflation is still happening. Gold prices are going to see a bounce from the lows because of this, but markets interpreted the data as just maintaining inflation within a manageable range, right? This is going to fuel expectations of rate cuts coming into the future, especially in September, while also prompting cautious market reactions and then help bolster the price of gold upward. Now, Trump is pressing on Powell, calling him too late Powell, to lower the rates, as he has been for a while. Now, Trump ratcheted up his criticism of the Fed official, right? The Fed chair. And I want to tell you what he said. This is Trump's words. These are not mine. Called him too late and a stubborn moron and insisted that he needs to lower rates. Powell, right? Immediately. And he even suggested that if Powell refuses, that the Fed board should step in to kind of like escalate things. And then obviously Trump is talking about suing Powell for like $3 billion in Fed building renovations. And he's considering a major lawsuit against Fed Chair Powell over allegedly mismanaging and cost overruns in the Fed headquarters renovations. Okay, he's saying, you know, this guy spent almost $2.5 billion whenever it was supposed to be $1.9 billion. That was their estimate. And Trump said that that building, and remember, Trump's a real estate mogul, and he said that building should have only cost $50 million to rehab, right? Now, the reality check of this is that it's seeming from legal experts, I'm not the legal expert, I'm just reporting the news, that Trump isn't empowered to remove or sue the Fed chair for policy disagreements or construction issues, but they are an independent agency. They're not actually a federal agency. They are a privatized agency. So, you know, we'll see how things shake out with that. But, you know, Trump doing Trump things, man. We all know about that. So it's going to shake up the market. So just be ready for that. Now, let's talk about the economic calendar, and then we will sign off of here. So let's just rip through it. CPI came in today. Okay, tomorrow we have producer price index. That's inflation, right? That is coming in at 8:30, okay? Then secondarily, we have on Friday, we have advanced retail sales, Empire State Survey, industrial production and capacity utilization, business inventories, which isn't that big of a deal. And then you have the Michigan report, the survey, right? Then the big dog, the big daddy stuff, right? The top guys talking. Trump and Putin have their summit. So pay attention to what's happening on Friday. Again, gold markets close into the weekend. Might be a time to stay out of the markets unless you're already in a profitable position. Because what we know is when things like this happen, dude, you can see a gap up, a gap down, and it could totally blow through your stop loss. Be careful. Then on Monday, we have the Business Leader Survey and the SCE, so Sierra Charlie Echo Labor Market Survey. This is at 11:30 to or 8:30 to 11 a.m. Okay. Then we have new residential construction and U.S.-China trade talks deadline on Tuesday. Pay attention for that deadline. It could get wild. It could get wonky. Markets could get, you know, they could be unstable, to say the least, right? They could get pretty wild. Then on Wednesday, which is when you will see me again, your verified pro trader and golden guide to the metals markets, you will see me on Wednesday, but this will happen before then, okay? Philadelphia's Fed non-manufacturing survey and the outlook at risk report. So just make sure you're paying attention to that, because that Philadelphia non-manufacturing report is actually going to potentially move the markets. So with that being said, I appreciate you so much for coming and watching the Golden Opportunity every single week. Seriously, it means the world to me that we have, you know, people that show up, 1,000 plus people every single week to the Golden Nugget. I said the Golden Opportunity. That's actually the training that we have inside of Verified Investing. But for all intents and purposes, I humbly appreciate every single person that shows up. If you want to get inside of the Golden Opportunity, the first link is in the description. Come learn with me. I will be there to walk you through this and guide you every single step of the way. It is the most targeted way that you can actually learn this information. And with that being said, I hope everybody has a wonderful rest of your week. We're riding into this week on gains from last week as per usual. And hopefully next week we will be riding in on the same type of gains. Everybody have a wonderful day.
Hey guys, Lawton here with Verified Investing, And today I'm here to talk about Kinesis.money, our sponsor. Thank you to Kinesis for sponsoring us. So Kinesis has this awesome thing called yield, in which you can literally earn gold by just performing different activities on their website and their platform. So the first way that you can earn on Kinesis.money is through their holders yield. So basically what that is if you buy some KAG or KAU from them, which is basically equivalent to gold or silver, they're one-to-one crypto equivalent of gold and silver, you're able to collect money from them, right? A percentage of all of the fees that Kinesis takes over transactions, over buying KAU, KAG, or anything else is distributed to people that hold on to KAG and KAU. So super cool. Now the velocity spending is also really cool. So if you spend KAU or KAG, you're actually going to get a percentage of all the fees. Again, this is of all the fees that Kinesis takes relative to how much you use Kinesis. So this is things from going to the grocery store and buying things on your Kinesis card. This are things like buying KAG, KAU, sending it to someone else. And finally, it's the same thing as trading on their platform, right? If you do any of those things, you qualify for this velocity yield. The next awesome way that you can earn with Kinesis is through the referrers yield. So if you refer any friends, family, you'll get a percentage of all of their transactions in perpetuity, which is super cool. They also have a partner for a program for partners and minters. But what I really want to focus on is this KBT, the most exciting part of Kinesis for me. 20% of all of the shares of all the transaction fees that happen on Kinesis are going to be distributed to holders of the KVT crypto token. There's a limited amount of crypto supply, but that's a really cool way to actually own part of Kinesis. You can get in on the ground level and just hold those tokens and collect a nice return. Thank you so much to Kinesis for sponsoring this video, and go check out their website at Kinesis.money.